I think a lot of millennials are getting to that age where they're starting to think about life insurance and whether or not they should get that for themselves and for their family. But what exactly does it cover? And there's different types of life insurance. We're going to be covering that in this video. Hey, what's up guys? It's Justine with Debt Free Millennials, the channel to help you crush your debt and live payment free. And we're talking about life insurance, but before we get into that, I want to give you a disclaimer that I am not a licensed insurance agent. So keep that in mind. This is just personal research that I've done and talking about my personal experience with using life insurance products. Now, if you want to talk about your personal finances, your goals, your debt, and just trying to get that streamlined so that you can add in things like life insurance, then you'll definitely want to check out my budget coaching program called Budget Bootcamp. It is a one-on-one private budget coaching session where you and I can talk about your debt, your budget, your savings, and get you on track to a feeling of financial confidence. I will leave a link in the description box below for you to check out. All right, now let's get back into life insurance. So what is life insurance? Life insurance is a policy that guarantees money that is paid out to your beneficiaries when you pass away. You will pay a monthly premium in order to keep that policy active. Now, when you pass away, that money that is paid out, and you get to choose various amounts to take out on your behalf. So it could be $500,000, could be $1 million. That money is then paid out to your beneficiaries that you deemed to help them take care of their lifestyle, to help them cover funeral costs, etc. Now keep in mind, when you pick the value of what you want for your life insurance policy, that's the face value of what your beneficiaries will actually receive, not the amount of premium that you've paid in for this policy. Okay, let's talk about different types of life insurance policies, because I'm sure you've heard a couple of terms being thrown around. The first one is term life insurance. Now, term life insurance actually specifies a specific amount of years in which that life insurance policy covers. Typically, you are going to see these in values of 10, 20, or 30 years. That means you could take out a policy for 30 years of coverage, meaning for the next 30 years of this policy, if I die within these 30 years, this life insurance policy is going to cover it. Typically, this is going to be your cheapest option of life insurance coverage. The next one opposite of that is permanent life insurance. Permanent life insurance is in effect the entire time of your living life. So long as you are paying the premiums every single month, this is going to extend for your entire life, and there's no set number of years that the policy is active for. One big caveat to permanent life insurance is they are typically more expensive than term life. Now, whole life insurance is a type of permanent life insurance, and a whole life insurance accrues a cash value. So you'll see like this cash value savings component plus the actual life insurance amount that you are trying to take out on your behalf. Next, there's universal life insurance, and this is a life insurance policy that's similar to whole life, only that cash value is going to accrue interest. Also, your premiums can be flexible and adjust over time. There are more types of insurances than what I mentioned, but I just wanted to give you a brief overview of the most popular ones that are out there. So why would you want to buy life insurance? The biggest reason somebody would want to buy life insurance is because they want to provide financial support to their dependents and beneficiaries should they pass away. If your family relies on a big portion or maybe all of your income, you really want to make sure that they are taken care of financially so that they're not only dealing with your death and grieving over that, but they're also dealing with trying to figure out how to pay the bills and how to pay your mortgage or keep the lights on. So a life insurance policy would help protect them financially so that they don't have to worry about the money and the cost of maintaining their lifestyle. They can then focus on memories and grieving and healing from the loss of you. Now, typically this comes into play when you get married or you settle down with a life partner or when you have children. These are people that are living with you, that depend on you, that are really part of your life. And so I think this question of whether or not you should get life insurance really comes into play when you have maybe a partner or a spouse that you're living with, or you have children or dependents that count on you. So for many millennials, it makes sense to get life insurance. Now, if you're a single person and you're thinking about life insurance, just keep in mind that that life insurance really only covers the costs of your funeral costs, or maybe taking care of any outstanding debts that you may still owe after death, or taking care of any property that you might have. So while I think it could be beneficial, you may want to talk to a licensed insurance agent about that if you do not have any dependents and you don't have a spouse or significant life partner. I would talk about that and see what exactly that money could be used for. Okay, so the big question is, should you get term life insurance or whole life insurance? By and large, term life insurance is going to be way cheaper than whole life insurance. Also, term life is way more simple to understand. It truly is a life insurance product, whereas a whole life insurance product is trying to rope you into thinking this is also a way to invest your money. But pay attention to the rate of return when a life insurance agent is talking to you about whole life and the ability to invest within this type of product. If the rate of return is anything less than what you could get on the stock market, it is not a way to invest your money. It is not a wise way to invest your money. You're better off with sticking with that term life insurance policy, which is going to be a cheaper monthly premium, and investing the difference in what you would have spent in a whole life insurance policy and investing that directly into the stock market. All right, so I wanted to pull up this chart from nerdwallet.com that compares the cost of term and whole life. And so you can see it really does depend on your age and just your health background. So you can see if you took out a 20-year term life versus 30-year versus whole life, the cost of those premiums is significantly different. So you can see, I believe these are for the year. So you can see $229 for the year for a 20-year policy versus $358 for a 30-year policy versus $4,300 for the year for a whole life policy. This is for a 30-year-old man. That's a no-brainer to me, in which you should be able to cover. So the way that you can do this, like if you're in your 30s, you could take out a 30-year term life policy. So that's going to cover you until you're 60. While you're doing that, you could take the difference of what you spent on the whole life policy and put that into your investments. Put that into your retirement accounts. Now, when you go to retire around the age of 60, you'll start taking withdrawals on that money. Keep in mind, those retirement accounts also have beneficiaries, and I'm assuming they're probably the same beneficiaries that you have listed on your life insurance policy. So in case of death, that money is going to be funneled over to your beneficiaries so that they can use it to either maintain their standard of living and help with funeral costs and all those other things. You want to get your investing accounts to a place where it is funneling money out so much that you don't have to depend on life insurance products regardless. So I think this is a way that you can hack the system, but really just thinking about it in a logical way, that this is the way to go, because you're going to save money. You're also ensuring those 30 years while you build up your investments in other accounts that are paying out a significantly better rate of return. All right, to wrap up, term life is the better option because you're going to pay a cheaper premium, monthly premium, and it's a very simple and straightforward product versus whole life life that is going to try to make you think that it is some sort of investing option when really it's not. It's so expensive. Also, if you want to financially support your loved ones in case of your death, life insurance is right for you. If you liked this video and you thought it was helpful in making the decision to take out a life insurance policy, be sure to give it a big thumbs up, and don't forget to subscribe to the Debt Free Millennials channel to get more info on how to crush your debt and live payment free.